$5.55 billion. That's what Cerebras Systems just pulled in one of the most aggressive IPO launches we've seen all year. Let me say that again, 5.5 billion. And it happened on a Friday in May when half of Wall Street is already thinking about their Hamptons weekend. This isn't noise. This is institutional money showing up with a checkbook and saying, we believe in AI infrastructure, period. Welcome back to TechMeHome, MarketPhase, Daily News. Let's be crystal clear about what just happened here. Cerebras, an AI chip designer that most retail investors have never heard of, just completed the largest US IPO of 2026, and we're already halfway through the year. That tells you something about where the smart money's flowing. Now here's the thing about AI infrastructure plays. They're not sexy like consumer apps or social media. Nobody's getting addicted to an AI chip, but every single AI company on the planet, they need compute. They need chips, lots of them, and Cerebras is positioning itself to compete directly with Nvidia in that space. That's the Goliath. The company that has basically owned the AI chip market since 2020. Think of it this way. If you wanted to build a house during a gold rush, you could mine for gold yourself. Or you could sell the pickaxes, the shovels, and the blueprints to everyone else mining. Cerebras is selling the pickaxes, and Wall Street just handed them a $555 billion check to make way more of them. Here's what makes this even more interesting. This IPO isn't happening in a vacuum. It's happening while we're watching a full-blown M&A circus unfold across Asia. In Japan, foreign private equity firms are in a bidding war over Kakaku, a price comparison platform. Li & Bain just sweetened their offer to $4 billion, topping EQT's previous bid. This tells us something crucial. Institutional investors aren't running scared. They're not hoarding cash. They're deploying capital aggressively into infrastructure plays, whether that's AI chips in America or digital assets in Asia. The appetite for growth is still there. The question is, growth at what price? Before we go further, here's a quick word. Market volatility like this is exactly why you need to audit your portfolio. If you're not diversified across sector exposure, you're basically gambling. Tools like Morningstar or even your brokerage's built-in allocation analyzer can help you see where you're concentrated. Protect yourself. Diversification isn't exciting, but it sleeps well at night. Now let's talk about what else is moving the needle today. Energy and materials stocks are having a moment. We're seeing renewed analyst coverage on ConocoPhillips, updated price targets on Valero Energy, and a whole string of precious metals discoveries. Vizsla Silver, America's Gold and Silver, Galliano Gold. Why? Inflation concerns. That's the whisper underneath all of this. When people start worrying that central banks are losing control of price stability, commodities become the hedge. Oil gets bid up. Metals get bid up. Because at least a barrel of oil is a barrel of oil. It's not a digital abstraction printed into existence by the Federal Reserve. Meanwhile, BlackBerry just launched a share buyback following TSX approval. That's BlackBerry, the company that got absolutely demolished by the smartphone revolution. Now they're in cybersecurity, and management is confident enough in their valuation to buy back stock. That's signal. Not necessarily that you should buy it, but it's signal that insiders think it's undervalued. And here's something that flew under the radar for most retail investors. Dollar Tree just beefed up their logistics infrastructure. Supply chain fortification. Sounds boring, right? But this is post-pandemic normalization meeting new paranoia about future disruption. It's a hedge within a hedge. They're saying, we're going to keep moving fast and cheap, but we're also going to be ready when the next crisis hits. So what do we do with all of this? First, understand that this Friday's market activity is telling us the institutional playbook. Bet on AI infrastructure, hunt for undervalued digital assets globally, lock in commodity exposure for inflation protection, and quietly exit overvalued segments through buybacks. Second, if you're a retail investor watching this, you need to ask yourself, am I positioned for this reality? Do I have meaningful exposure to semiconductors and AI? Do I have any commodity hedges? Or am I still 80% in the S&P 500 index fund, thinking that's enough diversification? Third, watch the energy sector closely. When metals and oil start spiking together, it's not a coincidence. It's the market pricing in inflation that the Fed hasn't officially acknowledged yet. That's always a warning flag. The reality is this: we're in a period of extreme bifurcation. Infrastructure plays and commodities are roaring. Meanwhile, retail discretionary and traditional tech are treading water. The money's migrating. The question is whether you're migrating with it or getting left behind. One more thing. Australian regulators just ruled against Coles on discount practices. That's a signal that scrutiny on corporate behaviour is tightening globally. If you're holding any major retailers or discount operators, watch for similar regulatory pressure. It's coming. So here's the bottom line for your week. Cerebras' IPO is a green light on AI infrastructure. The M&A activity in Asia is a green light on institutional confidence. The energy surge is a yellow light on inflation. And the buybacks are a sign of tactical valuation plays. Put it all together and you get a market that's still functioning, still deploying capital but doing it very selectively. If you're building a portfolio right now, you want exposure to AI chip makers, commodity hedges, and infrastructure plays. If you're already fully invested and worried about downside, you want to rebalance into stability and stop watching the daily noise. None of this is financial advice. This is purely for entertainment and educational purposes. Always do your own research. Talk to a qualified financial advisor before making any decisions with real money. And please, for the love of all that is holy, don't trade on what you hear on the internet. Thanks for watching TechMeHome, MarketPhase Daily News. We'll be back tomorrow with more breakdown of what's actually moving the market. Until then, stay sharp.